Good day everyone. This presentation is prepared for the BP48203 Integrated Case Studies course. Our group presents a case study on Ageson Berhad, later known as TXCD Berhad. TXCD Berhad is mainly involved in the construction business sector, which has consistently been the core driver of its sales and strategic direction. Although the company also operates in trading and property development, its strength remains in construction-related services, particularly engineering, procurement, construction and commissioning services, as well as civil and structural works. Over time, the company underwent several rebranding exercises, from Principtech Corporation Berhad to Ageson Berhad, and most recently to TXCD Berhad. However, major financial and audit uncertainties during the 2022 financial period resulted in PN17 classification, triggering restructuring efforts. The first accounting issue is the 4.5-month delay in appointing a new external auditor. Following the resignation of the former auditor on February 24, 2023, TXCD Berhad only appointed a replacement on July 13, 2023. As a result, the audit for FY 2022 could not commence on time, causing the company to miss the statutory deadline of April 30, 2023. The annual report was only issued on October 31, 2023, indicating weaknesses in internal control readiness and board oversight. The second issue relates to equity deficiency and shareholders' capital erosion. Shareholders' equity fell below 25% of issued share capital, triggering PN17 classification. This reflects accumulated losses and raised serious concerns regarding financial sustainability, investor confidence, and the company's ability to raise additional funds. The third issue concerns cash flow and liquidity constraints. Audit delays and PN17 status highlighted financial strain, affecting TXCD Berhad's ability to meet short-term obligations such as payments to suppliers and creditors, particularly during the 2022 to 2023 financial periods. TXCD Berhad experienced a severe operational crisis during 2021 and 2022 due to the COVID-19 pandemic. Movement control orders halted construction activities, causing project delays, cost increases, and cash flow interruptions as progress billing stopped while overhead costs continued. The prolonged disruption resulted in losses, instability within management, and the resignation of key directors. By 2022, the company faced accumulated losses, capital shortages, defaults on borrowings, and an inability to secure new construction contracts. Auditors highlighted material uncertainties relating to going concern. Another major issue was the failure to provide adequate audit evidence, as disclosed in the Annual Report 2024. Auditors were unable to obtain sufficient and appropriate evidence, including access to subsidiary auditors' working papers. This reflects weak documentation practices, inadequate internal controls, and deficiencies in management oversight. TXCD Berhad also faced increasing construction costs, including rising material, labor, and professional service costs. These exceeded allocated project budgets, forced additional financing, caused delayed payments, disrupted project execution, and resulted in work stoppages and project delays. To address the accounting and financial issues, TXCD Berhad must strengthen its governance practices, particularly in relation to auditor appointment. The company should formalize auditor appointment policies with clear timelines and implement emergency response procedures in the event of auditor resignation. Increased board and audit committee oversight is essential to ensure continuity in financial reporting. TXCD Berhad should also enhance documentation and verification processes. This includes stricter reconciliation policies, segregation of duties to avoid conflicts of interest, and the introduction of pre-audit checklists to ensure completeness and accuracy of financial records. These measures will improve audit readiness and compliance with reporting requirements. To rebuild stakeholder trust, the company should enhance transparency through open reporting of governance improvements and corrective actions, as well as proactive communication with Bursa Malaysia. To address management and operational issues, TXCD Berhad should implement a business continuity and crisis response framework. This framework includes establishing emergency operating procedures, diversifying the project pipeline, adopting digital and remote project management tools, and strengthening supply chain resilience. The company should also strengthen its financial control system by implementing a centralized financial management system that integrates accounting, procurement, contracts, and project data. This improves documentation quality, operational transparency, and long-term financial sustainability. In addition, TXCD Berhad should implement activity-based costing, which allocates costs based on actual activities and resource consumption. This enables more accurate cost control, better pricing decisions, improved budgeting, and more effective operational planning under rising construction costs. In conclusion, TXCD Berhad faced significant operational disruptions, financial strain, and governance weaknesses, which ultimately led to PN17 classification. These challenges arose from COVID-19 shutdowns, rising construction costs, weak documentation practices, delayed audits, and ineffective internal controls. The proposed accounting, financial, management, and operational solutions provide a structured recovery approach. By implementing these measures, TXCD Berhad can rebuild stakeholder confidence, stabilize operations, strengthen financial reporting integrity, and progress toward long-term recovery beyond PN17.